I've spent over 10,000 hours investing in crypto and analyzing the market. And I've seen it all: massive wins, brutal losses, and anything in between. And throughout it all, I've learned some powerful lessons that will save you a ton of time, money, and stress. In this video, I'm going to share the 7 most valuable lessons that I've learned throughout my journey. These are insights that other investors never talk about. So stick around until the end, because this video might just change the way you approach crypto for good. Now let's dive in, but before we do so, I just have a quick favor to ask you. If you enjoy watching videos like this one, and if you're excited for this crypto bull market cycle, then make sure to smash the like button so I know that you're paying attention and that you're ready to go. And if you haven't done so yet, make sure to subscribe to my channel as well, because I'm going to post regular videos just like this one to help you to get an advantage in the market. And my goal is to help as many of you to cross the finish line and to accomplish your financial goals this bull market cycle. Also, I need to make a quick disclaimer over here. Nothing in this video is financial advice. Everything has been created for educational purposes only. Always do your own research and or consult with a professional financial advisor. But in this video, I'm going to share what has been working well for me, what my insights are, so that you can determine for yourself if you also want to implement those things in your investment strategy and approach. So let's dive in. So my first insight is that FOMO, which stands for fear of missing out, kills more portfolios than the bear market. Everyone in crypto talks about, the next bear market, or we've barely survived this bear market, or it has been such a tough bear market. But what really messes up your gains and your portfolio is FOMO, fear of missing out. And here you see a picture of me in 2017. This is when I made one of my first few crypto investments. At the time, I had no clue what I was doing. I was traveling around Thailand with a friend who was making a lot of money in crypto, and I just overheard him talking about a few crypto projects. So I took a bunch of my hard-earned money, I threw it at a few different projects which he was talking about, and I just hoped that overnight I would become super rich because one of those investments would go to the moon. And that's basically how most investors in the crypto market are operating. I always like this meme. It's a scene from the movie The Hangover. And this is how most crypto investors basically behave in the crypto market. They don't understand what they're investing in. They have no game plan. And they're just randomly throwing their money at different investments left and right, hoping that they're going to hit the jackpot. But if this is the way that you approach investing, then you might as well go to the casino, to be honest. Most crypto investors are gamblers, they're not investors. So here are a few important statistics which I want to share with you, which is going to shed a little bit more light on this whole glorified gambling casino that most people see the crypto market as. So here is an article by CoinGecko, and it said that 5,300 new tokens are launched daily in 2024 so far. So this was posted in April. We've seen that around right now in April 2024, there are 2.5 million crypto projects. Okay, that is insane. 2.5 million crypto projects. So here you see another breakdown that in 2024 up till April. Why April? Because in Q4, Q2 of this year, we saw a lot of hype in the crypto market because people were anticipating that the Bitcoin spot ETF would be approved. So we also saw an altcoin season. Altcoins were popping off left and right. And we see that around 540,000 crypto projects were launched in 2024 up till April alone. In the past few months, it's now October, you can probably expect that a lot more have been launched too. In March alone, we saw that around 200,000 crypto projects were launched. So this gives you an understanding of how many crypto projects are currently being launched. And here is the tough reality. Most of these projects will go to zero. I'm going to even make it bold. Most of these projects are going to go to zero. And this is what the average crypto investor doesn't want to hear. Because when the average crypto investor thinks about crypto, they have this dream in their mind where they can turn practically $1 or 50 cents into $1 million overnight. So they start to look for these new altcoin gems which have 100x, 1000x potential. But in reality, many of these projects are just created simply to rob you from your hard-earned money. So all of these projects, for example, the 200,000 projects that have been launched in March 2024, many of those projects were created by people that create simple copy-paste meme coins or altcoins with a landing page full of buzzwords. They open up a Discord community, Telegram community. They do a fake launch where they manipulate the price, and then they rug pull people and scam them out of their money. That's the harsh reality of most crypto projects. But let's say that you find a crypto project which is actually serious about the future. So it's not just a rug pull. They're actually trying to build something of value over the long term. Well, even if it is such a project, there is a big obstacle. Why? Because there are limited resources which are spread across a lot of different crypto projects. So as I mentioned before, there's 2.5 million crypto projects. And all of those crypto projects are competing for 3 different resources. Resource number 1 is attention. So the crypto market is very sensitive to hype and narratives. So you hear all of these narratives, for example, the AI narrative. So we saw a lot of AI crypto projects pop off. We also saw the real world asset narrative popping off. So there's a very short window of opportunity where all of these projects within a certain narrative start to pump. And all of the other projects which are not within that narrative or within that hype don't get much attention. So that's the first resource that they're competing for, attention. Next is money. There is limited amount of capital within the crypto market. Right now, the crypto market has a total market cap, I believe, I'm not sure, I believe it's around $2 trillion or $2.3 trillion. And all of that money is searching for the best projects that gives them the best gains. So if all of the money flows to a few projects which are really hyped up, it means that there's less capital available for all of the other projects which are competing for the same investment that is floating around in the market. So it's becoming very, very competitive. So even if you are a serious project, it's very difficult to raise enough money to actually deliver on your roadmap that you've promised to your community and your token holders. And then the third resource that all of these crypto projects, these 2.5 million crypto projects and the 200,000 projects that have been launched in March alone are competing for is talented developers. Right now, there are very few, and there's a limited amount of developers which can write blockchain native programming languages like Solidity, which is the native language to the Ethereum blockchain. So all of these projects are competing for the same pool of talented developers. And the way that developers work is they always try to search for the projects that they can work for that have the biggest probability that they will succeed over the long term. So again, they're competing for attention, money, and developers. And all of this moves quite a lot. So there's a lot of movements between those within the crypto market. And statistically, 95% of most altcoins don't survive the next bear market. So if you are too late with cashing out your crypto projects, your altcoins, your shiny objects, your altcoin gems, then unfortunately there's a very big likelihood that it will never recover or even go to zero. And that is the harsh reality that most crypto investors don't want to hear. But if you're actually serious about succeeding in the crypto market over the long term, then you need to accept this harsh reality and you need to embrace that there's also a new way or a better way to approach the crypto market to build long-term wealth as an investor. So let's talk about the second insight that I have, and that is that the most successful investors in the space know when to do nothing. So the internet is filled with day traders, which give you a promise that you can turn practically $1 into $1 million overnight by following a few patterns on your screen. I compare day traders almost to the weather forecaster on TV. Yes, it is possible that that you can predict the weather correctly for one day. Maybe you can predict the weather correctly 2 days in a row, maybe even 5 days in a row. But no weather forecaster predicts the weather correctly 365 days per year. And if you are a trader and you make one good trade, the second good trade, the third good trade, and then you get overconfident and you start to bet everything because you think you're some kind of trading genius or god. You start to use leverage and then you wipe out your entire account, and then still most traders, actually 95% of traders, if it's not 98% of traders, lose money in the markets. And that's why I believe it's a lot more interesting to invest over the long term rather than trying to speculate on short-term movements, because the market is very unpredictable. There's a lot of news that often comes out which also causes short-term price fluctuations. And if you're inexperienced, then oftentimes you get wrecked. Do I believe that there's still a small group of traders that make a lot of money? I do believe that they are there in the market, but they have made it their full-time commitment to monitor the markets, to learn, to do it over many years in a row. And they don't do it just as a side hustle, because if you don't take it serious, you will probably lose a lot of money. So if you look at some of the most successful investors, I always look at Warren Buffett. Warren Buffett is one of the wealthiest investors in the world. He accumulated his wealth through investing. He now has a net worth of more than $100 billion. And he is known for just making one or two investment decisions every single year. And this is a sharp contrast to what many traders on social media make you believe. So many traders tell you to get in and out of positions, whereas Warren Buffett just makes one or two investment decisions every single year. And in the rest of the year, he's just very patient and he allows time and the market to do their thing. And to give you one example, here you see a tweet by Thomas Randolph. It's a tweet from 2011, and he's saying, well, Bitcoin has stabilized at almost exactly $14 per coin. I'm tired of waiting for a jump, so I'm taking the loss and getting my cash back. Well, right now, Bitcoin is at $60,000, $68,000 per coin. Maybe at the time that you're watching this video, it might even be higher or slightly lower. But if Thomas would have just been patient and he would have held on to his Bitcoin, then now he would have been thousands of percents in the plus. But Thomas was impatient. He was thinking very short term, not long term. And he missed out on a lot of gains because of this. So imagine how expensive this was for him. And with expensive, I mean lost opportunity if he would have held on to his investment. And that's why it's important, I believe, to do your research, to position yourself in one or in a few really great projects which you believe have potential over the long term, and then just be patient. You don't need to day trade, you don't need to swing trade. It has been proven that most people are better off just holding on to really great investments over the long term and allowing those assets to grow in value over time. Here, again, I like to emphasize that within the crypto market, everyone is looking to get rich quick, just like Thomas over here, instead of being patient and allowing the market and allowing time to do its thing. While the left is probably a much better investment strategy, most people are opting in for the right and ultimately lose their money in a very short period of time. Because if you're trying to get rich quick, you take excessive risks by either day trading or getting into super risky projects, and ultimately you lose money. Whereas if you're just patient, like this monk, you just invest in a great project, you assume that the money is gone, you continue with your life as usual, and in a few years you check your portfolio, and then you'll notice that if you have indeed invested in a great project, it will have appreciated a lot in value over time. For example, one of the best investments, I believe, and still believe it is one of the best investments, is Bitcoin. I think it's one of the biggest asymmetrical investment opportunities, meaning that the downside risk is quite low compared to the upside potential that you can still get with Bitcoin. And over the past 10 years or the past decade, from 2011 until 2021, Bitcoin was the best performing asset class of the past decade. It generated on average 230% per year, and that compounds. So 230% one year, next year 230%, the year after that 230%. So that is insane, and that is unprecedented in the traditional financial markets. But if you are like Thomas and you are impatient and you just sell your Bitcoin at $14 because it's not moving up and down as quickly as you want, well, then you're going to miss out on a lot of gains. I believe that just holding on to really great investments over the long term is going to give you much better results than trying to get in and out of shiny altcoin positions. Again, if you would have held on to your Bitcoin, you would have seen gains like this: 11,645%, 7,382%, 1,991%, simply by being patient and holding on to your Bitcoin. So will Bitcoin deliver these returns again? Well, we don't know. But if we zoom out, we see that the returns are slowly diminishing, meaning they become less, but still we see an increasing trend. And especially with all of the institutions that are now getting into the crypto space, I still believe that there's a lot more room for growth for Bitcoin. And when I'm talking with new crypto investors or unexperienced crypto investors, and I tell them about Bitcoin, they say, yeah, well, Bitcoin is too expensive for me to own one Bitcoin. Well, here's the thing. You don't have to own one Bitcoin. You can own fractions of Bitcoin. So half a Bitcoin, 10% of a Bitcoin, 1% of a Bitcoin. So you still get exposure to this asset class. Why do you have to own one Bitcoin? That's just purely ego. Maybe you can own 10 Bitcoin, maybe 100 Bitcoin. It all depends on your capital, but don't let the benchmark of 1 Bitcoin or 10 Bitcoin be the reason why you enter or don't enter a certain position. You should just get exposure to really great investments that you really strongly believe in and have researched, and then just be patient. The third insight that I want to share with you stems from this book that I've read from Jim Rohn. It's called The Seasons of Life. And in this book, Jim Rohn explains that if you want to become successful, you need to think like a farmer. Everyone wants to get a really great harvest. So over here you see a very successful harvest. You see multiple people that are harvesting the fruits that have been planted earlier throughout the year. And when they go to the market and sell it, they earn a nice profit. That's what most people want to have in business, in investing. But in the crypto space, most people are very impatient. Again, I want to refer to this image. Everyone wants to get rich today. So let me put that in contrast with what Jim Rohn explains in his book. Jim Rohn explains that if a farmer wants to have a very big harvest, then he needs to understand the 4 seasons of the year, and he needs to adjust his behavior accordingly. So what are the 4 seasons of the year? Well, you have winter. During the winter, the soil is frozen, so the farmer can't really do anything. So what do you do during the winter? You reflect on the previous year, you take inventory, you invest in educating yourself, learning, gaining more skills, and making a game plan for the next year. Then spring arrives. Spring is the time to prepare the soil and to plant the seeds. So if you want to get a good harvest, you need to already initiate this a few seasons earlier. And then summer arises. During summer, most crops start to grow. So during summer, you need to give a lot of love, water, attention to these crops so that they can grow very big. Also, you need to protect your crops because other people might want to steal your crops. Then the autumn season comes, or fall. And fall is harvest season. And that is the time where you're going to reap the rewards from all of your hard labor throughout the previous seasons. And if you've done this sequence of events well, you're going to have a nice harvest. But what most crypto investors do is they want to plant the seeds and then reap the rewards or reap the harvest within the same season. That doesn't really work. If you want to build wealth in the crypto market, you need to understand the 4-year cycles and you need to plant your seeds earlier. So here, if you look at the crypto chart of the past decade, you see that the crypto market tends to move in these very explosive cycles. So here suddenly you see a peak and then it corrects again. And then a few years later, it pumps again and then it corrects down again. And a few years later, it shoots up again. And right now we're preparing for another bull market leg up. So these cycles move in very predictable patterns. If you analyze all of these market patterns, they tend to have the same anatomy. And I often refer to this Wall Street cheat sheet, which gives you a rough understanding of the anatomy of a market cycle. They all move from disbelief, where people just believe that this asset is never going to recover again, to hope, because there's a sudden surge in the price of an asset. We've recently seen this with Bitcoin. And then people start to become more optimistic because the price keeps on going up. And then they believe because of recency bias, and recency bias is if something has been going up in value in the past few weeks, then because you believe something has happened in the past, you will believe that it will keep on doing that in the future. It will go up and up and up and up. And that's when people start to sell their houses, sell their cars, put all of their life savings into crypto. And then it reaches a point of euphoria where all of the valuations are just completely disconnected from reality. You get a correction. People don't want to give up hope. They think the market is just going to reset, and then it dumps. And then when it dumps, people start to panic. So they panic sell, they sell their investments at a loss. They believe it's all going to go to zero. They get very angry. They don't want to know anything anymore about the particular investment. The news headlines start to become very negative, and then you enter a depression. So this is the crypto market cycle, and basically any asset moves in this cycle, but the crypto market moves in very predictable 4-year cycles. And you need to understand that if you think as a farmer, so we're coming back to this story from Jim Rohn again, then you need to understand that if you want to make a lot of money in the bull market cycle, you need to plant your seeds earlier during the anger, depression, and disbelief phase. Those are the best times that you can plant your seeds. And then during the belief, thrill, and euphoria phase, that's the moment that you should harvest, or you should reap you should start harvesting, and you can actually take profits on your positions. So most people want to get in during optimism and get out during euphoria, but in reality they miss the top, and then they get in during optimism and they ride the wave all the way down to anger and depression. And that's because you haven't planted your seeds early enough for them to grow. So yeah, once you get your head around this cycle and you understand when to plant your seeds and when to take your harvest and take your profits, that's when you're really starting to build your wealth at a fast pace. Okay, the fourth insight is that bull markets are actually a lot shorter than you think. And you should always have an exit plan in mind. Otherwise, you're probably going to ride the market all the way down and you need to wait another 4 years in order to take profits again. And we humans, we have many different biases in our mind. There's this book called Thinking Fast and Slow, and in this book they explain many different biases. They also explain the recency bias. And the recency bias is a tendency for us to believe that whatever happened in the past few weeks will continue to happen in the next year. So if crypto has been going up for the past 4 weeks, then we have the tendency to believe that it's only going to go up and up from there. Also, for example, if you've had a bad time with your business or in your job or with your relationship, it has been going quite shitty for the past few weeks, then in your mind you start to become very negative and you believe that for the next year it will also be very negative. So this is how the recency bias works. Now, you need to understand that all bull markets come to an end. And when they come to an end, they come to a very aggressive end. So usually they correct down with minus 96%, minus 86%, minus 84%, minus 77%. Maybe this bull market cycle, it will go down with minus 70%. But again, if you haven't taken profits, you're going to ride the market all the way down to the bottom, or you're going to sell your positions with a loss, or you need to wait another 4 years for the market to recover again. And I would hate to see that happen to you. So instead, you need to create an objective game plan with objective sets of criteria when you're actually going to take profit. And I have recorded a few videos on my YouTube channel where I share my personal investing game plan, my entry plan, my exit plan. And I always explain that for my personal exit plan, people always ask me like, hey, Mitchell, at what price are you going to cash out? And I always tell them, I don't even look at the price. The price is irrelevant because the price doesn't tell you anything about the health of the market. It's a very one-sided data point. I like to look at a set of 8 different indicators. One of these indicators is, for example, the Pi cycle top indicator. And when 3 out of the 8 indicators tell me that we are seeing a cycle top, that's when I'm going to aggressively cash out on my positions. So this Pi cycle top, the way that it works is when the orange line crosses above the green line, that's usually the cycle top. So here you see 2 lines, and this is a free indicator which you can find on lookintobitcoin.com, or you can Google Bitcoin Pi cycle top indicator and you can find it for free. So when the orange line crosses the green line, that's when we've seen cycle tops. So we've seen it 4 times. It has been accurate in predicting the cycle tops 4 times in a row. And that's one of the indicators that I'm going to look at. Next, I look at the MVRV Z-score. To give you a little bit of context, the MVRV Z-score, it's a mathematical computation which basically calculates how oversold or undersold Bitcoin is. When the golden line hits the green box, it's usually a market bottom. When the golden line hits a red box, it's usually a market top. So in addition to these 2 indicators, I have 6 more indicators, and whenever 3 of these indicators show me that we are close to a market top, I'm going to aggressively cash out on my positions. And that is my exit plan. So during a bull market cycle, because of this recency bias, people will tend to become very greedy. They believe that everything is only going to go up, but in reality, it won't. You will see very sharp corrections down, and that's why you need to have an objective set of criteria to cash out on your positions or not, at least if your game plan is to take profits this bull market cycle. And I believe most people, especially because they have a short-term time frame where they want to get rich quick, I do believe that this is extremely important. Okay, now when you talk about investing, one of the main things that you're going to hear is you need to diversify your investment portfolio. But here is my insight. Diversification doesn't mean that you should hold 50 different coins. Diversification means that you should strategically manage your risk. Here is a quote by Charlie Munger. Charlie Munger is the partner of Warren Buffett. Together, they run Berkshire Hathaway. I believe Charlie Munger actually passed away. But he's a very well-known figure in the crypto space, and not in the crypto space, in the investing space. And he shares a lot of wisdom. And one of his quotes is, "It's absolute insanity to think owning 100 different stocks instead of 5 makes you a better investor." So when most people hear diversification, they hear it and they take it as an excuse to randomly throw their money at different crypto projects left and right, just hoping that one of those crypto projects is randomly going to explode and is going to make them super rich overnight. That's not diversification, that's gambling. So what does diversification mean? Well, it means that you do your research and you look for projects that you truly, really believe in and that have long-term potential. For example, you invest in Bitcoin because you see it as a great store of value with a lot of adoption happening right now. You invest in Chainlink because you believe that all blockchains need some kind of oracle in order to connect off-chain data with on-chain data. So it connects the real world with the blockchain, and it's going to play a very important role in connecting those two. You might invest in Solana because you're looking for a smart contract platform which can empower the new generation of Web3 technology. So now you have 3 different projects with 3 completely different use cases and different audiences and ecosystems. I believe that is great diversification. But holding just 100 different coins just because you want to diversify, I think that's a terrible investment decision. That's gambling. Now my 6th insight is that consistency compounds a lot faster than short bursts of brilliance. And I compare this to going to the gym. If you want to build muscles, you need to go to the gym consistently. You need to hit the gym 3, 4, 5, 6 times per week. And you need to do that over a period of a few years. So most people only go into the crypto market when we see these bull market cycles, when we see all of the hype, all of the FOMO, all of the crypto projects are popping off left and right, and then they want to go into the market real quick to make a lot of wealth. No, that's not how it works. If you want to become a great crypto investor, you need to stick around. Not only during the periods where we see massive pumps in the market, but you should also stick around during the bear markets, because that is when real wealth is built. Again, we go back to this book from Jim Rohn. You need to understand that you need to plant your seeds early. And investing is just like building a muscle. You don't do it by just making 1 or 2 investments and then getting out of the market. No, you do so by being consistently in the market over time, learning, educating yourself, subscribing to my channel if you haven't done so yet, and listening to all of my videos where I break down what is going on in the crypto market so that you actually learn and grow and understand what is going on. So when you build your investing muscle, and when you gain more knowledge and education, a better mindset, then actually you see a great example here, MicroStrategy. MicroStrategy is a publicly traded company led by Michael Saylor, their CEO. And in 2020, they adopted a Bitcoin treasury strategy, meaning that with all of the reserve cash that they have, all of the excess cash, they started to buy up Bitcoin over time. And they kept on buying Bitcoin, regardless if Bitcoin was high, low, or anything in between. They just kept on DCAing. So MicroStrategy right now has purchased Bitcoin around 40 times in the past few years. Here in the orange line, you see the price of Bitcoin, and the black dots are basically when they purchased Bitcoin. And right now, they are up massively on all of their Bitcoin positions. So this is a matter of consistently, not just trying to make a few very clever investments. No, you need to invest consistently. Real wealth is built over time. You need to be in there all the time. And you need to make it a habit. You need to build a muscle. Another legendary case study of making investing a habit and building your investing muscle is actually the country of El Salvador. So in 2022, they announced that El Salvador was going to buy 1 Bitcoin every single day, and they have kept on buying 1 Bitcoin every single day. And now they're holding quite a lot of Bitcoin in their national treasury. And back in the days, El Salvador used to be one of the poorest countries in South America. And it had one of the highest crime rates. And now actually it's becoming a much better country. They're not reliant anymore on external entities to borrow them money. They also lowered their crime rate. I believe now they're one of the safest countries in South America. And they've made a massive turnaround. They call it the El Salvadorian economic miracle. And that's a nice side effect of just consistently buying and DCAing instead of trying to make 1 or 2 really clever moves. Now, talking about building your investing muscle, whenever you are investing, you need to spend money. And in our minds, we often associate spending money with pain. We don't like to spend money because we have worked hard for that money. So there's always resistance when people need to swipe their card or make a bank transfer. So one of the things, or one of the ways how I have been getting exposure to this market and how I have been getting into this market consistently and profiting from Bitcoin, whether it's going up or down, is by mining Bitcoin. This is a completely automated process where you basically get specialized machines, you install software on top, and these machines process transactions on the Bitcoin network. They're basically the banking system of Bitcoin. So behind me, you see many of these Bitcoin mining machines. And on autopilot 24/7, they're processing transactions on the network, and they earn a commission in terms of Bitcoin. And all of this Bitcoin is then sent to your wallet. So rather than DCing into the market, I have these miners produce Bitcoin for me. And if you're curious about how all of this works, I've recorded a short 11-minute video about how this entire process works and how you can profit from Bitcoin mining too if you're interested. So if you want to learn more about that, then make sure to check out the link in the description below. Watch the video, and yeah, basically based on that information, you can determine if you are going to utilize that strategy as well. Because I do believe that this bull market cycle, crypto miners are going to generate record amounts of profits because all of the institutional adoption that's currently happening. BlackRock is buying up thousands and thousands of Bitcoin every single week, and this is driving up the prices, or at least I believe this is going to cause a supply shock, which is going to send Bitcoin to unprecedented heights. And the higher Bitcoin becomes, the more profitable Bitcoin mining becomes. So definitely interesting to check that out. So if you're interested in Bitcoin mining and how you can get started, even if you currently don't have any tech skills or prior knowledge of mining, I explain everything to you. Just go to the link and check out the training. The final insight that I want to share with you is don't just simply follow influencers. Why? Within the world of crypto, it's very shady actually, because many of those crypto influencers which shill you crypto projects, which tweet or post on Instagram or YouTube about this new crazy crypto project that can 10x, 100x, whatever, not financial advice, they always put it in there. Oftentimes, these same influencers that shill these projects either created these projects and they're somehow affiliated and earn money on the back, or they basically receive token allocations or commissions for shilling these projects. And oftentimes, they're not shilling the highest quality projects. And oftentimes, if you are one of their followers and you're blindly following whatever they're saying, then you might lose a lot of your hard-earned money in this process. So that's why I never blindly follow these influencers. I always do my own research and I check what their connection is to those potential projects to see if they have any hidden agendas or incentives. So yeah, the crypto world is still the wild, wild west. All right, there's a lot of cowboys in the industry. Everyone wants to make a lot of money quickly. And unfortunately, there's a lot of unethical marketing of crypto projects and shady constructions in the backends where people earn very hefty commissions. I believe that the people who make the most money during crypto bull markets are actually those influencers that just blindly promote every single crypto project. So be very careful of those, because those could cost you a lot of money. Now, we've gone through a lot of these insights. I hope that you found them useful. Let me know in the comments below if you found this video useful and if you want to see more videos like this one. Also, make sure to smash the like button if you got good value out of this video. And yeah, that being said, peace out, guys. I'll see you in the next one.